It adds obviously to the overall risks that are concerning Eurozone investors currently, but the bigger risk for the Eurozone is definitely the tit-for-tat war with the US. Now, if we look at the exposure of the Eurozone to Turkey, it's not that much. In particular, if we look at direct exports from the Eurozone to Turkey, it's around 60 billion euros a year, or around 0.6% of GDP. So if we assume that there's a deep economic crisis in Turkey, then we could see exports going down around 25% from the Eurozone to Turkey. And this would reduce annual GDP growth in the Eurozone by around 0.1%. So this is not really concerning. But where it gets a bit more concerning could be if we look at the political repercussions. I mean, there are over 3.5 million Syrians currently in Turkey.
Which is exactly what I was going to come to as well, because I think going away from the pure economics of that situation, and I was trying to get the most updated number. 2016, I had a 2.6 million refugee figure. Now we understand some in the region of 3.5 million people displaced have sought refuge in Turkey. And again, it's something I was talking to Karen about yesterday. I've seen it on the streets of Turkey. They're there. You know, you can see a lot of Turkish refugees around the, Syrian refugees around the country. The deal with the EU could be in tatters potentially on the back of this.
That's right. I mean, this is the biggest concern for the Eurozone, that Syrians who are currently, and refugees in general, who are based in Turkey, are going to be incentivized to leave Turkey if there's a big economic crisis. And also President Erdogan might be inclined to increase the price that he asked from the Eurozone at the moment for hosting those Syrians. So this is definitely a topic we have to watch out for.
Given his track record in terms of negotiations, hot and cold on relations, you can't obviously rule that out. I want to come back to some of the news that we've been talking about with some of the limits and restrictions that the banks have been facing so far this week, a limit of 50% on some FX swaps, but that's been reduced to 25%. What are the implications of those types of limits, restrictions? I was calling it capital control, but there's some dispute about whether this is a full-blown capital control. But what are the ramifications as you see it?
What Turkey does at the moment is just not enough. You have a proper wildfire in Turkey. You cannot come with a garden hose and try to extinguish it. It's just not enough. What the market wants is a massive increase in the interest rate. That's necessary. Plus, additionally, we need the commitment from the central bank to try to get to their 5% inflation goal. That's also something what we missed during the last rate hike that the central bank did. And the second thing is we need a complete U-turn from President Erdogan in his relationship to the US. We need to have friendly relationships between Turkey and the US, because otherwise we could end up in a big tit-for-tat economic sanction war, which Turkey would certainly lose.
When you're talking about a garden hose here, what he's been doing is been sort of tinkering around with certain restrictions, but the market wants is a market-friendly move, such as an interest rate hike. How concerned would you be about a move towards tighter capital controls? I mean, we've clearly seen it in the European crisis around Cyprus and Greece, but there have been a lot of critics about those types of measures exacerbating sensitivity and volatility around the currency, which has been the real epicenter of the pain for a lot of companies.
Yeah, I mean, obviously everyone wants to try to prevent capital controls. We've seen in Greece, for example, summer 2015, when they were implemented there, that it had a negative impact on economic growth because it reduces consumption. But probably there might be no other way around in Turkey, in particular if you would see a bank run, because there is over 200 billion worth of euros and US dollars deposited by the Turkish population in Turkish banks. And if they feel that this might not be safe anymore, then obviously they will try to get access to that money as soon as possible, similar to what we saw in Greece 2015. And then in this environment, there would probably no other possibility than to introduce capital controls for Turkey.
Hey everybody, it's Hadley Gamble from our new CNBC Middle East Bureau in Abu Dhabi. Thanks for stopping by. Now to watch more, you can try one of the videos that just popped up on your screen. And don't forget to subscribe.